Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. India's information technology majors are reportedly in the middle of the largest retrenchment drive ever, with newspaper Mint saying that 7 of the biggest IT firms are planning to ask at least 56,000 engineers to leave this year. The big companies include Infosys, Wipro, Tech Mahindra and HCL Technologies, and together employ more than 12 lakh people. While layoffs happen in all IT companies every year, the scale this time seems larger, thanks to America's new H-1B policy and fundamental shifts in technology. But this also raises the larger question. Is India facing a much bigger jobs challenge that goes in some ways beyond IT services? And what are the solutions ahead? And how are we going to fix it? To discuss this, I'm joined by R. Chandrasekhar, President, NASSCOM, Soumyakanti Das, Chief Economist at State Bank of India, and Brinda Jagidar, also economist. So, Mr. Chandrasekhar, let me start off by asking, we are seeing reports of a wave of retrenchment in many IT companies, including the big ones, and the numbers obviously seem to be a little higher than what was perhaps expected earlier. Is this something that you were expecting too, or is this unanticipated?
First of all, I think let me say that one should take everything one hears with a pinch of salt. The reality is quite different from, I think, what some of the perceptions that are floating around or that are being sought to be projected. The reality is that in the industry, there has always been a practice of a certain amount of attrition based on an evaluation of performance, and which is critically related to both the performance and the skill sets. Because as you know, in this industry, acquisition of new skill sets is a continuous process and is an absolute imperative for every employee, irrespective of the level at which you are functioning.
Right. So two quick questions. So one is that I think at least the way reports are putting it, while it is acknowledged that let's say up to 2% of releasing or retrenchment will happen in any case every year, and all companies talk about it, the percentage is expected to be higher only because we have a tightened H-1B policy in the US, and also the fact that industry still has to catch up with the effects of digital. So that is one part. The second is, this is a larger jobs discussion that we are having here. As the number of potential jobs to engineers go down for all the reasons that you pointed out, what is the overall impact that we can expect in a larger sense to the economy and the country?
So I think first of all, the first part of your statement is a myth. It's being perpetuated, there's no doubt about it, and there are a lot of people who are advocating that point of view. But the fact is, it's a complete myth. It's absolutely incorrect. There is no linkage at all. I mean, in the US, the number of people who even go on an H-1B visa in a year is barely 20,000, less than that, if you look at the number of all the Indian companies. And when you look at it in the context of an industry which employs 4 million people and which hires a fresh 150,000 people in a year, that will give you one sense of proportion. The second thing is that there has been no change in the number of people going on an H-1B visa now. There's not been any substantive change. So all of this is, I think, perception which is not rooted in reality at all.
Right, but Infosys, for instance, has said that it's going to hire 10,000 people in the US. Surely that's going to have an impact on their workforce or headcount in India, right?
What makes you think that the Infosys was not hiring people in the US every year for the past, 10, 20 years?
Okay. No, I'm just saying the numbers seem to be much larger.
The point is, I think, partly because of the fact that in the US, again, a myth has been perpetrated in the media there, that the IT industry is taking away jobs from the US, is taking away jobs from qualified American workers. Both these are not true. The industry is a huge contributor to jobs in the US. And secondly, the industry also adds to the availability of jobs in the US through the services that it provides. And thirdly, there is a skill shortage in the US, which is well known.
Right.
So, therefore, because of this perception, it has become important for our industry to highlight the fact that they are actually hiring people in the US.
Fair enough.
So what Infosys has done is bring out the fact that they are actually hiring so many people. It's not that they were not hiring in the past, but they were not talking about it as much.
Okay.
So I think that is a situation which needed to be addressed.
Fair enough. So, Mr. Chandrasekhar, by your own admission, the number of jobs will shrink, right? Because, as you said, the amount of jobs required to create the first 100 million was much more, and every subsequent 100 million has reduced over the years. So,
number of jobs will not shrink. Again,
yeah.
I don't want to be quoted inaccurately.
Yeah.
The number of jobs will not shrink. The rate of increase will shrink.
Okay.
The percentage rate at which job growth is taking place, the percentage rate at which new hiring is taking place will show a gentle decline as a percentage in relation to the percentage growth in revenue, number one. Number two, the base is increasing. So even though the percentage is smaller, it's on a larger base, which actually increases the number. So that's the, to look at it in the correct perspective.
Okay, Soumya, what's your sense now as we go ahead? Are we ready for a situation where we're actually, subtracting more jobs at a much larger, higher or faster pace than actually adding them?
No, I think it's of course true. If you look into a report which has been recently published by UNDP, which says that between 1991 and 2013, about 300 million people entered the labor market, of which India produced only 140 million jobs, and it is expected by 2050 another 280 million people will come into the labor market. And if you even look at the employment elasticity, that means for every 1% increase in output, what is the addition to employment, which was 0.3 at one point of time, has now reduced to 0.15. So I think the scenario on the job market looks a little more difficult. And given the pace of automation in the industry, the pace of consolidation, the structural changes, I think things are not going to get better anytime soon in the near future.
Right. Okay, Soumya, you talked about the number of people entering the workforce, but obviously of the 18 million people that enter the workforce, roughly a lot of people do get absorbed. There are some disputes or question marks about how many go into unorganized sector and how many go into organized. But a lot of jobs are getting created, or perhaps we are just not able to know or read them. Is that? Would you agree with that?
No, I tend to agree with you, because the problem in India is that India doesn't have an employment data, and whatever is published, that is in part of the NSSO survey, which I don't gives you a complete picture. And to answer your question also, I think needs to be the job market also in the Indian context needs to be looked into little differently, because if you actually look into the India's employment profile, more than 50% of the people are actually self-employed. So in such a context, I think the current government, what it is also trying to do, and that's why the picture, this doesn't get reported all the time in the media or in the market, is that it is trying to create avenues for more self-employment. For example, the Mudra scheme which has been launched is an example, and around 35 crores, I think, 3.5 crores of units have got loans in the last 2 years after it was launched. And even if I assuming that each unit employs at least one people, that could give a potential employment to around could have potentially given employment to around 3.5 crore people. So I think the picture needs to be looked into a different context, because India is a country, and the problems which I just mentioned, the way the robotics is going, the way the structural changes coming in, given the current share of the manufacturing in the total GDP of the country, which we intend to increase to 25% by 2025. I think these problems will remain. So we have to take a different view, look at a holistic picture, and create different hygiene factors for employment generation. For example, the other thing which I could immediately think of is that the trend in job creation has been now recently skewed towards the part-time and the contractual jobs, and that will be the order of the day. So what the government needs to do is to actually create a favorable employment atmosphere, those people who are employed in part-time and contractual jobs. In terms
Soumya, the thing is, the kind of jobs that are being lost thanks to, let's say, IT retrenchments are different from the ones who could be potentially self-employed. I mean, people who could be potentially self-employed. So, I mean, there is an aspiration issue here, and there is perhaps, survival issue on the other hand. So, don't you see a conflict between the two?
No, see, I'll tell you one thing. I think you have reached a very valid point in terms of the conflict. my point over here is that in the Indian context also there is a huge rural population. There is a rural population, urban population. The type of jobs which I am creating in terms of this employment mostly comes from the rural areas and the rural service sector. For example, setting up a stationery shop, a transfer operator, or suppose setting up a parlor. So these type of shops are, I think, at the lower end of the scale, but there is also a market for that. So, and at the end of the day, we have to create an amalgamation of an atmosphere whereby both rural sector and the urban sector get jobs in the priority. So for the rural sector, why we may think of creating more jobs for self-employment. For the urban sector, the point you exactly mentioned, maybe creating a more favorable atmosphere for job creation, which may not be full-time in nature, but maybe contractual in nature. So by that,
I think it's here the industry itself needs to change, because now there's a greater emphasis on automation, robotics, artificial intelligence. There's no moving away from there. So earlier it was processes, coding. That is not the way the industry is going to go going forward. So we need the industry itself, and I think the NASSCOM chairman himself has said that this is what needs to be done. Tech Mahindra has got one very important initiative called David. There's automation, and SMAC is a way to go forward. Social mobility.
Right.
So it's just that
SMAC. No. So my question, Brinda, is that there is a time lag, right? So one part, and IT industry, let's say, is relatively more resilient to training, to re-skilling itself, and so on. But there is a larger jobs challenge which you cannot find solutions that quickly. And more so because you're talking about a whole bunch of engineers who are going to come into the workforce and they're not going to find jobs, in addition to the ones who are going to get retrenched. So how are we going to fix that?
This is a huge challenge. Now, even this, US itself has committed to the WTO, for instance, that they are going to create 65,000, they will give 65,000 H1B visas every year. India had a comparative advantage in terms of its workforce, skilled and low cost.
Which is gone now. I mean, not gone, but let's say it's diminishing.
Correct. So we took advantage of that and we won in the open competition. So now we'll have people coming back, which means we have a pool of people. So we need to get our policies up and ready and going. And so that is what will really help, because India is poised for double-digit growth. Let's not forget that. Niti Aayog has also said that, and I completely agree. Right. So we need to use these people, and of course the recent policy which the government has announced, that preference will be given for locally made. So if local hiring is the way to go, I think India should also do that.
Right. So you're saying that all this should dovetail into one another, and therefore it should work out. Okay, Soumya, are you seeing that similar confluence? I mean, a strong Make in India focus, domestic industry revival, therefore more domestic jobs, or at least engineers and young aspiring people who think that they should work for enterprises which are domestic facing. Of course, they may have no choice.
See, I think that's obvious, because at the end of the day, if you look into the example of China, if you are going to create your manufacturing sector from say 11% to 25, 2025, the government is aspiring, that's obvious. But the larger question is, I think the government also needs to create an enabling atmosphere for some areas which are neglected in India. For example, if I just give an example, is research. If you look into the, for example, the institutes like the IIT, IIMs, you will find that at least 40 to 50% of the seats over there in terms of the professors are still lying vacant. So I think some of the systems like research in India is not properly incentivized, and therefore the governments also need to think along those lines which are coming up first and which needs to be more incentivized and more catered to job creation. So until and unless we think of some out of the box ideas, and I think in this context the government has set up a workforce in the right manner, I think it may be a little bit challenging given that the nature of job addition to the Indian labor market over the last decade or so.
Yeah, Brinda?
I would say let's not forget the way, let's not look only at how our labor is, we have to reskill our labor. Look at China, for example. They are leading in artificial intelligence. They have overtaken the US also. So we need to go into these areas, high-tech areas, and prepare our labor force, which is already competent, and especially with those who are coming back. Yeah. So we need to get into that market.
Right, and you're saying that, when we talk about higher growth numbers and all that, that will somehow include the fact that we're going to face some of these challenges, or rather we'll surmount these challenges and still achieve those.
We need to surmount them, otherwise we will not be able to achieve that.
Thank you, Mr. Chandrasekhar, Soumya and Brinda. We need to go in for a break. Coming up on the other side, India's banking sector is facing a massive bad loans crisis. Is a new solution likely to solve the problem? I'm going to be joined by Ashwin Parekh and Madan Savnavis. Let's find out more. Stay with us.
We have been saving people in terms of accurate forecasts and warnings, etc. At present, as you know, that earthquakes cannot be predicted. We are doing a lot of work on that aspect also to understand the earthquake processes in the Indian subcontinent. I personally feel that maybe after 20 years or 30 years, there could be some way of predicting earthquakes.
Watch Eureka with Dr. Madhavan Nair Rajivan, Secretary, Ministry of Earth Sciences, only on Rajya Sabha Television.
Welcome back to Policy Watch. At least a dozen banks could face the Reserve Bank's prompt corrective action or PCA measures under the new guidelines for cracking down on non-performing assets, now touching over 700,000 crore rupees in the Indian banking system, reports have said. Now, last week, the government cleared an ordinance in the Banking Regulation Act to act swiftly on loan defaulters and bad loans. While bad loans have been a mounting problem in recent years, solutions have not come early. One reason is banks are worried that recognizing bad loans will affect their balance sheets and also invite investigations into why the loans were granted in the first place. The larger question is, can this and other moves clean up the banking system, which in turn could trigger more active lending in the country and help the economy? To discuss this, I'm joined by Ashwin Parekh of Ashwin Parekh Financial Consultants and also Madan Sabnavis, Chief Economist of Care Ratings. Gentlemen, thank you both for joining me. Ashwin, let me begin with you. So the ordinance came last week, but let's do a quick revisit. So where do we stand in terms of the problem of bad loans in the economy?
Well, I mean, let's start, looking at the journey, about 3 years ago, when the numbers started hitting, the system, the balance sheets of the banking system, then it was realized that something had to be really done about it. Now, at that point in time, between the regulator's office and the government, they came out with a slew of different measures. So we saw willful defaulter, announcing willful defaulter for the purpose of making sure that the banking system would not lend to such people, any further. Then, of course, we came with a JLF kind of mechanism. We had once again revived the CDR in the form of SDR and in some form. And then we also came out with S4A regulations. Now, one thing that really did play a little role in this entire process was somewhere along there was a need, a recognition that the extent of haircut that the banking system was required to take, and what the government and the regulator thought, there was certainly a big gap. And because of that, and because of the fact that the banking system, had become a little more fearful about the investigations and cases being reopened at a later date, the decisions were not coming from the banking system. So we saw a lot of JLF forums, for example, just meeting and then doing nothing about resolution or whatever.
Yeah. When banks get together and decide what to do about something.
That's a joint lending forum. And because different haircuts were required to be taken by different banking companies, the decisions were not forthcoming. So on account of that, I thought in the backdrop of that, this measure of ordinance plays a significant role.
Okay.
We'll discuss how it plays a significant role in that regard, basically.
Right. Okay. But then let me get a perspective from you before we come to the solution or the new solution to attend or address the problem of non-performing assets. How bad is the situation today?
No, I think the situation is definitely bad because I think for a very long time we tried to push this entire thing below the carpet by saying that there's something called restructured assets, which I remember in the 1990s we would have called it evergreening. And we always said that if projects are not done well, it's because of extraneous conditions. But I think except where there is willful default, normally any kind of an NPA is because of extraneous conditions where business conditions turn out to be perverse. So I think this, because of prolonging this particular agony, I think that's when we've suddenly realized at some point of time that our stressed assets in a region of 12-13%, and that's when we've jumped up and tried to sort of find solutions. And I think the problem is very much deep-rooted because we've had a situation where banks have managed to show high business growth, they've shown high profits, they've shown very good market valuations on the basis of high business numbers. And then suddenly at some point of time when we're thinking of disinvestment, trying to privatize them, we realize that the valuations are coming down on account of the high NPAs because they're not going to get good valuations in the market. So I think it's bad not just from the point of view of overall growth conditions in the country, but also for the overall state of health of the banking sector.
Okay, now let me come back to you in a moment. So, Ashwin, now we've got this new audience, we've got this prompt corrective action. So, how is it going to actually happen, and how will it work, and how will banks actually begin to unfreeze what's frozen?
Yeah, so there are different aspects to this, but I suppose, I mean, a step, I would say, rather than the step, is certainly in the right direction. You know, by virtue of the ordinance, you know, this particular measure that you're referring to, three things have come out. One is the government has once again demonstrated its seriousness. You know, saying that this is becoming a problem. It's not now confined only to banking system. It is affecting the economy itself, because the ability on the part of the banking to fund economic growth is really now coming down. One. The second clear message was that, let's say, the regulator's office, you know, had to be drawn in to take away in some form or the other the fear, the element
so does this move address the fear?
It in some form, it largely does. Now let me articulate this point. Let's say by virtue of oversight committee, you know, this fear in some form or the other is taken away. Because what will happen is that the proposals are developed by the bankers, but they are offered to the oversight committee, and the oversight committee then thereafter makes the decision. So to that extent, now there are larger questions. I mean, in the sense, is there some kind of an immunity mechanism, or will there be on the committee itself, for instance? You know, a few years or a couple of years later, it shouldn't happen that someone decides to reopen the committee's
and go after the committee, saying that why did you? Yeah.
But apart of that, aside of that, I thought the bankers can now breathe easy. If they really have meaningful, let's say, resolution solutions, they can take them to the oversight committee, even if does involve higher haircuts than what the regulator was earlier allowing, or their books would allow.
Right. Okay, so haircut is a good point. Let me come to Madan again. Madan, so if we are saying the size of the problem is about 700,000 crores, bad loans, what is the size of the haircut or the loss that banks will have to take in order to achieve everything that we've been talking about?
No, I think now with this ordinance coming in, I think the decision is going to be taken by the oversight committee. So I don't think the banks are going to have much say in terms of the haircut. Because right now nobody knows whether a 10% haircut is right or whether a 50% haircut is right. But by transferring this entire onus onto the RBI, which I feel is a practical solution, but I'm not quite sure whether there are cases in other countries where the central bank actually gets involved in resolving commercial decisions, because I think that's what we're actually looking at. Because finally, at the end of the day, in case the haircuts turn out to be large, and then we say that the banks may just turn around and say that, look, we are not doing well because we had to go in for a higher haircut than what we would have done in case we had the choice because of this particular ordinance. So I'm not quite sure about how this would really pan out once it starts getting implemented. But definitely the banks will be free of this burden of saying that we are not taking the decisions. It's being taken by a higher regulatory authority. And I think what Ashwin was talking is also very much pertinent, that at some point of time the oversight committee members should not be having the same kind of problem which bankers have today of being haunted for taking decisions today, maybe after another 5 years.
Let me get a number, Ashwin. So of these 700,000 crores, how much do we need to actually get moving on? Because finally, this is a problem that's mounting.
So see, I mean, I'll tell you, I mean, any number that one may put out, you know, it could range anywhere between, let's say, 200,000 crores to, I mean, it could be even a little more than that. But this is purely an intelligent estimation, you know, or a guesstimate. You see, why I'm saying this is, see, the issue confronting the banking system is very different in case of different sectors. Let's take steel, for example. Now, we all know that steel was looking very bad last year. It may start looking a little better this year.
And then the government is also
the government is, of course, coming into
policy
that
and so on. Yeah.
Likewise, telecom. Likewise, coal. You know, the first allocation of coal that happened, those who win, I mean, those who were really getting the allocations went to the banking system. Then the whole thing was cancelled. Then the reallocation happened.
Right.
Now all those items sitting on will have different extent of haircuts.
Right.
You know, that's the point I was trying to make.
Yeah, but and you're also saying, I think, which is which some banks have been saying, that some of these loans may actually turn good.
They will.
I mean, not too many of them, but some of them will turn good.
They might, yeah.
Because things have changed or improved.
And also, it will also bring an interesting element. It will also then make the regulator examine the extent of haircut required for different sectors. So one size fitting all, you know, that kind of regulations will not work in a situation such as this. Is something that is now, I mean, coming together.
Right. Madan, so how quickly do we need to move on this, whichever path we follow, whichever committee does this, and what is at stake?
No, I think it has to move. The movement has to be very quick, because we are talking of a situation where banks are not in a position today to lend on account of the high NPAs, and that is also in turn affecting their overall capital requirements. And given the fact that we are talking of privatization, asking the banks to go and raise funds from the market, to get a proper valuation, you need to make sure that your books are clean. So currently it looks like that, it looks, at least from the number of results which have come out of commercial banks, that a large number of these banks might have seen the worst of it and things could only be looking positive from now onwards. So I think there won't be this burden of saying that our recognition issue has not been sorted out. It's more a case of now sorting out these bad assets through this resolution mechanism. So to my mind, in the next couple of years at least, we should be seeing at least maybe this NPA number, which you're talking of 9 lakh crores, coming down by at least 2 to 3 lakh crores.
Right. So are you in concurrence with that? A couple of lakh crores is what we can knock off?
Yeah,
the overall gross assets and gross NPAs?
True. I mean, that's the kind of size of, let's say, something that we may come across. The second thing is something very critical. I thought, what we did have in the banking system was a huge overhang of overcapacity. The corporates borrowers had built a huge overcapacity. Now, the economy will start performing and the loans will start performing. Once the capacity, that excess capacity that was built in 2012-13 era, starts getting
But
utilized.
are you saying this in general? Because you know specific instances where this is happening?
I'm saying general, but let's say at the same time, let's not forget, let's say that if you looked at capacity such as steel or cement, we all agree that let's say in 2011-12, whatever we had, we've not been able to use till about 2015-16.
Right.
Now, I mean, banking is all cash flows. So if you can't use your capacity, you're not generating cash flows to repay. See, and so that's the kind of environment.
So then there's a larger bet saying the economy will pick up, domestic consumption will get consumed or absorbed, and then therefore some of these companies will come out of it.
Exactly. So therefore, I mean, if you're prepared to take the haircut now, and if you're prepared to fund, let's say, for a certain period, then the economy will certainly revive. Capacity will get utilized, cash flows will start generating, in which case the banking system will once again start getting the repayments, basically.
Right, but there is a certain part which we surely need to this thing, because it's surely gone bad, not even if everything has it.
Very true. In fact, that this is where I think we seem to, some sectors, for example, have suddenly become so bad, that it's going to take either very long for them to come back, or we're better off by just writing them off.
Okay, and those would be?
So, for example, let's say, if we look at, for example, let's say steel. Now, we know that some amount of rationalization still is required even after all these corrections. We also know that telecom is another big one that will call for some rationalization. Because if you're going to continue with auctioning at this price, for instance, and the revenues of the banking system, of the telecom companies, so we've results. And we saw that we have now seen that the cash flows have started coming down. Such situations will take longer to control.
Fair enough. Ashwin, we've run out of time. Thank you, Madan, as well. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.